Sovereign Wealth Fund. He holds a PhD in economics from the University of Aberdeen and is currently studying an MSc in taxation at the University of Oxford. A prolific researcher and sought-after commentator, he is regularly featured by the BBC, Bloomberg, The Economist, and the Wall Street Journal.
So, Dr. Theo Champon, you're welcome. Our next panel member is a market woman and a market queen. She's known in private life as Messina Afrowa-Nijan.
Messina Afrowa-Nijan is a respected market leader and a prominent figure in Ghana's informal economy. She serves as president of the Greater Accra Markets Association, GAMA, Makola Market Queen, and Queen Mother of Abola Wemprakwa, where she holds the stool name Na Afrowa-Dade Impadua I. As president of GAMA, she represents traders across more than 300 markets in the Greater Accra region. She is known for her collaborative leadership style and strong advocacy for her members, championing the professionalization of informal trade and the inclusion of market women in national development planning.
Auntie Messi, you are welcome. This is not your full regalia, but it's good to have you. Wonderful. Last panelist, but not least, is the Vice President of GUTA in the person of Mr. Joseph Paddy.
Joseph Paddy is the Vice President of the Ghana Union of Traders Association, GUTA. He previously served as the Public Relations Officer and Director of Industrial Relations of the association. He is a prominent voice in trade discourse, consistently advocating for policies that support Ghanaian traders and the wider private sector. He is also known for his strong views on Ghana's tax system and the high cost of production environment.
So those are our panel members. Let's put hands together for them once again. Joseph, it's good to see you.
Nice.
So as you can see, we've grouped the 6 panel members into 3. Sat to my left are the real sector, but AGI, GNCCI. So that's Mark and Seth. And then we have the 2 economists, Dr. Theo Champon, Dr. Afro-Mensah. And then we have the 2 people from the market. This is GUTA traders and the market women. You can get a sense of what we're trying to achieve this morning. We also have the CEO of GIPC, who's here as an observer. He says, I can't hear private sector and not be there. So we'll introduce him later on. Before we get into the discussion, I'd like us to be on the same page. So what I've done is a short overview of Ghana's economic journey since 2019. So before we get into the discussion, we want to tell you a quick story about Ghana's economic journey over the past 6 or 7 years. We've put this together with our friends from Finex Skills Hub to give you 9 key highlights of the Ghanaian economy and how it's changed over the past 7 years. Now, we start from 2019 because 2019 is the year before the pandemic in 2020. Now, the monetary policy rate was 16%, debt to GDP was 62%. So in a sense, we can measure all success and compare to 2019. We all know what happened in 2020 where COVID, as a major shock, hit the world. Our deficit widened. But the crisis began to take a toll in 2022 when inflation peaked at 54%. We all remember the debt exchange and all that happened within that year when Ghana was kicked out of the international market. So this is a very important reference point. So there's a 2019 pre-COVID reference point. There's a 2022 reference point. And then, of course, the IMF program began in 2023. Then things began to improve 2024. And now we see some very good numbers in 2025. So in analyzing this economic journey, we have the 2019 pre-pandemic reference point and then the lowest point. You can also even use 2024 because this is when a new government took over as well. So depending on what you want to see, you can either use 2019, 2022 or 2024. Now, what is the first story? Price. The most important thing is stable prices, right? This tells you all you need to know about where we've been. Again, in January of 2022, inflation was about 14%. By end of year, inflation was 54%. Inflation has been coming down, but even throughout 2023, it was well above 20. Don't forget, we've been pursuing single-digit inflation as a policy for a long time. You can say that the only time we hit single-digit inflation well and so truly was after the last quarter of 2025, where by August 2025, inflation was around 9.4%. Now it's around 3.2%. So this is a massive drop from 54% inflation. That is incredible. And our economists explained to us what 54% inflation means, what 3.2% inflation means, and I'm sure there are questions around that as well. The next big story is the real sector, because most people say, you may say something has come down on paper, but in our pocket we can't feel it. Well, the Bank of Ghana will tell you that some surveys they do reflect the real sector as well. So, for example, in 2022, business confidence was 79.2%. That's below 100. The last time they did the survey in January was well above 100%. That's consumer confidence. Business confidence as well, about 75% in the crisis year of 22, now at 110% when January is considered. The composite index of economic activity, which is an accumulation of various economic sentiments, again, was negative 4.3 in 2022. It was below zero. Now it's well above 10, 12.4%. So it's a major issue to say in the past at least 4 years, we've seen clear improvement in business confidence. This is real sector. Again, panelists will discuss what this number means for what they do, whether they are AGI or they are GNCCI or they are GUTA or they are market woman. This is very important indeed. The third most important issue is the interest rates. All right, that's the price of credit. There are many rates, but the big one is the monetary policy rate. This is the signal rate the central bank sets. It's yellow. Again, from 2019, it stabilized and then started going up in reaction to the economic downturn. It's a measure of trying to stimulate growth or manage excess liquidity in the system. Big point, the shortest of them is the treasury bills, and which is why we are saying the short end of the curve has collapsed. T-bills essentially are people lending to government. When you have higher T-bill rates than average lending rates, people prefer to give money to the government. So this is not such a bad thing. In fact, the drop of T-bill rates is very positive from two angles. It reduces crowding out. It means that if I'm a bank and I want to deploy, I'll prefer to give the money to somebody because they will give me 17% back as against giving it to government who will give me just 4%. So this is a very good thing. Again, economists will explain. But if you want to look at the change, it's in the way the graphs are coming down. The key point though is that the monetary policy rate seems to take a while to transmit into this, right? Again, we'll explain whether this is a challenge with the rate itself or whether it's just a transmission mechanism. But the big thing is that this reduces crowding out. So it sounds very positive. Then, of course, this one, if the fundamentals are weak, the exchange rate will expose you. Very important numbers. This is basically the price of FX. The dollar is the leading currency. Therefore, we use this. Again, from 2019, average depreciation of the cedi, around 13% 2019. A bit of stability because COVID trade globally came down. So we didn't really depend on the dollar that much. We had to manufacture our own PPEs and all the rest of it. The crisis year, cedi depreciated against the dollar by 30%. The next year was no better, 27%, same. Things started improving marginally here. First time in many years, we end a year with an appreciation of our currency against the dollar. This is a big point that the panelists have to discuss, right? How did we come from negative to this? Of course, so far, after March, slight depreciation. But again, that 4.6 is closer to the pandemic years. All right. So this is a big story that has to be discussed by the panel members. So I'm hoping, and don't forget, we have two economists on the program, Dr. Gloria Affo and Dr. Theo Champon. So they'll try and explain what this means. But again, GUTA and the AGI and the GNCCI, why is the exchange rate so important to them? Why do they always complain about the dollar? How can we sustain this? What did it take to get here? Big one. The next one is the external sector. Okay, so again, some pressure on the currency means that if you import more than you export and you have a trade deficit, it worsens your currency. So what is the external sector saying? Look at this. This is our trade surplus. It's been very flat, consistently below 4% for the past few years until 2025, or $3.8 billion, 3.8, below 4 billion, I mean. So this is the amount, right? 2.3 billion pre-pandemic, 3.8 billion, the highest before 2025. First year of this government, 13.8 billion. Clearly, there's a gold story to be told, all right? Gold exports 21 billion, all right? And therefore, this is our first surplus after years of a deficit, 9.4 billion. This is a big story. Are we too dependent on gold? Is the Bank of Ghana just selling gold, or actually buying gold? For which reason this has changed? Or there's something more to the gold story? Is it the gold board? But this is a big story that has to be explained. Of course, this leads to the international reserves as well. There are various ways of measuring this. The government has this ambition of what it calls 15 months of import cover. Essentially, how much reserves you've built up so that if there was nothing new, no new earnings, do you have enough money to import your essentials as a country? Import cover is a very important percentage, all right? And if you look at it, we are 5.8 months as of February. It's been usually 2 to 3 months. It was 2.7 months at the end of 2022, less than 3 months. It's now gone to 5. They're saying they want to get to 15. This is the value of the international reserves in terms of the money. Again, it's gone to its highest this year, 14.5. And then when you net it, it's still above 10 billion. So clearly, something good is happening on that side. And the question to the panel would be, what does this mean for you in real time? Do you even understand this? Does it make any sense to you? Fiscal operations is government expenditure and government taxes. A couple of big points. Tax revenue was 12.2% in 2019. It's 13.1%, maybe 1% up improvement. Total expenditure, big issue. So in 2020, government expenditure was 26%. Now it's 16%. So there's been a cut in expenditure. Is this too difficult a price to pay? Or has this been the price we've paid for the good numbers we saw prior? Capex has also suffered, right? It was at 3.7% in 2021. It's now just 1.4%. So we are not spending enough on capital expenditure, at least as of 2025. And then here are the big numbers to show. So our primary balance is positive. Our overall fiscal deficit has also improved. It used to be close to negative 8% in 2024. It's now just negative 1%. Okay. Let's end with the public debt. Again, a big issue. As of 2021, this is what led to us being kicked out of the international market. Debt levels unsustainable. We were told that debt to GDP above 7%. We were 78%. All right. Then 2023, 68%, also still very high. 2025 in the recovery year, 45%. And therefore, you are having a reduction. Of course, the debt stock is still rising. But how important is this? So in a nutshell, from these 9 factors, clearly there's been a turnaround. The question for the panel members is, what does this mean to you? How real is it? And how can we sustain it? When we come back, my 6 would be answering these questions. Stay with us. Welcome back to the Channel 1 Economic Outlook, and we are here with 6 panel members before a live audience who will make their presence known with a round of applause. Please put your hands together. Wonderful. As I indicated, the CEO of the GIPC, Mr. Maji, has joined us. Mr. Maji, welcome to the program. We'll hear from you later on. So, because we wanted to simplify things, we tried to just reduce all of that to 9 key points. So, Dr. Afol Mensah, and then later Dr. Thew. Does this present a good enough summary of where we are, or are there a few things you want to add to give us a basis for the discussion?
All right, thank you, Bernard. That was a very detailed presentation, and I like the language that was used. No technicalities, at least they were very minimal. Clearly, from the way you did the presentation, comparing where we were at 2019 through to where we are currently, you can see that the numbers are good. The numbers are good from an economist perspective, because I'm looking at the macroeconomic indicators. Maybe I'll make 2 responses, because these are some of the things that usually when we hear that the macroeconomic environment has improved, to the ordinary person, you are thinking that, well, then there should be more money, in your pocket because you want to feel it, right? So yes, you see that we got to our peak of inflation rate in 2022. That was about 54%. And now we've seen inflation dropping. It doesn't mean that prices should be falling. Inflation simply means that the rate of change has now, reduced from what we are experiencing. So if you are reporting that the end period or the year-on-year period inflation at the end of 2022 was 54%, it just means that the rate at which prices were increasing was that value. Now, if you are reporting inflation, well, the match rate says it's 3.2%. It still means that prices are increasing. It's the rate of change. And that is a very important thing because if you have the rate of change in the increment reducing, it gives us some level of confidence in the economy. And so I'm not surprised that the confidence that you quoted about the economy looked good compared to 2019. And so that is something that we need to know about it. Now, when the rate of change in inflation is also decreasing, yes, you don't expect to see money, but it also means in real terms we are saving, right? Because how much you were spending before, if it has reduced, then it means that, well, you have something to save in real terms. And for me, as somebody who is also interested in women's economic empowerment or the quality of life, it means that you can channel those real savings into something else. So maybe that is one of the things that I will start with, just for us to get a clear perspective that we don't expect the prices to be decreasing. It's the rate of change. Because after all, no economist would argue for a zero inflation, because you need some amount of inflation to stimulate the economy. Think about producers. It's not just about consumers. So some amount of inflation is good to stimulate the economy. The economy will grow, and then, well, we will also have employment in the economy. So that is where probably I will stop for now, and then maybe it will continue.
Wonderful. Was that comprehensive? And for you, what do you think it took to get these type of numbers, Theo?
Yes, so thank you very much. And I probably start off from where Doc finished off from. And really, the presentation and the numbers that you showed on the screen is the same numbers that we presented 2 weeks ago at the IMF spring meeting. So I was there with a team from the Ministry of Finance and the Minister himself. We met different stakeholders, whether they are investors, the IMF itself, the World Bank, other people that have a stake in Ghana's economic well-being, and ordinary citizens. And one thing that came across consistently in all of these things was like, you have done well. And let me explain this. You know, the pace of the change that has happened, typically you don't see these good numbers happen within just one economic cycle. If you have to do sort of adjustment, and the very painful adjustment that we've gone through as a country over the last kind of 2-3 years, you begin to see the numbers sort of improve within 3 to 5 years, right? But we've actually done this in around a year and a half, such that for the first time in one of the numbers that you had, you look at your current account surpluses, the balances, and it's actually gone up 6 times beyond what the baseline was. You look at the exchange rate numbers, and consistently, you could go back 20, 30 years, it has always been negative, right? The CD losing ground relative to the dollar and all our major currencies. And for the first time in over 30 years, you actually had a sustained appreciation of the CD. And even now, with all the pressures that we're seeing from the ongoing war in the Middle East, we still don't see people actually queuing up at the pumps looking for petrol to buy, right? One thing is very important in all of this, which is basically the stability that the exchange rate has brought. For many people, and I want to move away from a bit of the technical things, for my grandmother in the village, right, for the tradespeople here, often 3 things are key to them. The first thing is interest rate. The second thing is inflation. The third thing is basically confidence. Do we have confidence enough that if I make an investment today, if I go and borrow money from the bank tomorrow and I make an investment, I can make a return right on that. And all those three things, whether on inflation, which has come down, and the point that she was making, it does not mean that prices are not going to go up, or even prices are coming relatively down. Let me explain. If 2-3 years ago your inflation rate was 54% and you had 100 cedis, to make it very simple, it means you would have had to spend at 54, you would have had to spend 154 cedis, isn't it? Okay. Now, because you've had a process of disinflation, and now you're talking at around 3 or even 4% for argument's sake, what you're doing is that you're now having to spend what? 103 cedis. So basically, between 54 cedis extra that you would have had to add on versus the 3 cedi extra, the difference is that you're able to now channel that to other productive investments. So it does not mean that prices are coming down or you're in a deflationary environment. Rather, the rate of that change is what is important. And importantly also, having it being stable over the long period of time. And this is basically what the central bank tries to do, to anchor that inflation expectation, because you cannot do all the reforms that you're doing if you don't have a stable macro. It's as fundamental as that. And then what then means would be the translation to the interest rate dimension, where you can see consistently the rate is actually come down. So now if you go to the bank, you're able to borrow at around 15 or so percent. I'll use myself as an example. I'm talking to my bank to actually get a mortgage, and they gave me a quote. The quote is actually around 13%, right, for a CD facility. And this would not have been possible a few years ago. So what I'm basically trying to communicate here really is that the numbers that you're seeing on the screen are real, and people actually are feeling it in their pocket. Let me give you one other anecdote, and then I will come to the point you asked, okay, what did it cost us to get here? I got back into town yesterday, and I went to my barber to get a haircut.
To get ready for today's program.
For today's program.
He did a good job.
And he did a good job. His name is Senor Junior. He runs a barbering shop called Ralph's Hairstyle, just next to the Ministry of Finance in Kanda. The estate.
So your barber is even in your office?
Oh, yes.
You have no social life?
I told him I'll give him a prop. Reason is because I had an interesting discussion with him, as I always do. Because that is the real economy. All these decisions that we're making, fundamentally, it's about cost of living. It's about people feeling it. Good. And then the discussion was basically very simple. A few years ago, how much was he charging for a haircut, right? In 2020, 2021, 22, he said it was about 30 cedis. And then in the height of the crisis, he has adjusted it to 50 cedis now. So yesterday I paid 50 cedis for my haircut. Wow. However, he's not thinking about increasing that over the medium term. In other words, because the exchange rate and all these other positive development that you're seeing is actually relatively good, he's not thinking about having to increase the price of the haircut. So to stay 50 for a while? For a while, right? And because the inputs that he's buying, like the blade or like the comb and all those things, again, you see the prices being relatively stable. So I'm just trying to bring these little anecdotes and stories to connect to the nice things we just showed there that we see on there. The cost of that is, of course, there are policy trade-offs, right? In all of this in economics, we say there's nothing like, it's no free lunch. We'll come to that. Okay. But I think you've done a good job. Is it okay? Can you give me a round of applause? Wonderful. So what I want to do now is I'll start with these two people. We put out 9 figures, which are important to your members. So inflation, interest rate, real sector and growth, exchange rate, external sector, international reserves, fiscal operations, public debt. So AGI, who are you guys? And which of these things do you look at as the most important indicator of your health as a manufacturing group? So Seth, let's start with you.
Okay, so thank you. So AGI is basically an industrial association.
Okay.
We are largely industries and service providers across the country. We're everywhere. And for us, we look at the economy in different ways.
Okay.
You talked about the macros. And indeed, before I come to your specific points, the macros are very important to us. Okay. In the past, whenever we don't have stability in the macroeconomic environment, we complain, and we complain a lot. And because if you don't have a stable macro environment, you can't plan, you can't predict, you can't expand, you can't do really solid business. And for investors, both local and international, you're always looking at what is going to be the return on my investment when I put in so much resources. Don't forget that the investors, they don't have all the money they invest. They also borrow. And they are borrowing at a cost. When we put it together, depending on the cost at which I'm borrowing and the cost of doing business, then the returns will also kick in. So the macros are very important for you to predict.
Okay.
And I think that we have indeed seen significant improvement in the macros. There's absolutely no doubt about it.
Okay.
AGI, we have our own way of analyzing it. We have our business barometer report, which we've been doing for more than 10 years. And on a quarterly basis, we actually do this survey. And for the past 3 quarters, interesting things are happening. We are seeing the confidence level go.
Grammarly now uses AI to help you write, not just revise. Type a prompt and generate a persuasive, mistake-free draft in seconds, personalized to your unique writing style. Download it for free at Grammarly.com.
You've got a great idea. GoDaddy has the perfect domain name to go with it. It only takes a few minutes to register one with over 500 extensions to choose from. Plus, every domain comes with the AI-powered experience, Aero, which will create essentials like a logo and landing page for you in minutes. With 80 million names sold, GoDaddy is the world's #1 domain registrar. Take your idea online today.
Zen Petroleum is a company that has been in existence for 15 years. They are listed on the stock exchange, and earlier on, I caught up with the CEO of Zen Petroleum, William Terrier, to talk about the journey of this fascinating oil company and their inroad into the capital market, listing on the stock exchange. Enjoy. So we are here with the CEO of the Zen Group, which is a fully integrated petroleum company, and they've been doing some amazing work in the past 16 years. They are now going to list on the stock exchange, and we want to find out the Zen story. How did they begin? How did they grow so quickly? And why are they going public? All this and more when we come back. Welcome back. So my guest is Mr. William Terrier, who is the founder and CEO of the Zen Group. So what is this group? What are the various aspects of the petroleum value chain that they play in? And what has been the secret behind their success? Mr. Terrier, thanks for joining us on The Point of View. Congratulations on 16 years of Zen.
Thank you.
How did it start?
It started in 2010 with a single contract to supply diesel to gold fields in Takwa. It started as a journey of curiosity. It led to our second mine, our third one, and now we're branching out into a retail sector, or we branched out into a retail sector 5 years ago, and that's another market sector that we're looking to grow, and here we are today.
So beyond the retail, you are into transport, you are into bunkering, you are into petrol, you are into mining. Tell me about the group and the various components.
Okay, so we started off with Zen Petroleum, which is the OMC, the oil marketing side of things. So we deal with the end customer. Subsequently, we acquired a bulk distribution license, a BDC license, to take care of the imports. And we had challenges on the transport side of the business, so we decided to start to get into that space. We started off with a women's only logistics business. We now have 100 plus trucks doing our own transport. We do a bit of bunkering to the vessels, as you mentioned. We're into lubricants as well. We blend our own lubricants. So we're pretty much along the entire value chain in the downstream sector. And we own a terminal in Takoradi as well.
Wow. But in terms of supplying lubricants or fuels to the mines, we understand you are either the top or number 2.
We're a major supplier to the mines in Ghana. We used to be probably about 80% of the market. It's now down to around the 50% mark. But I think it's important to stress that the mines only consume 6% of what of the entire downstream sector. So mines consume 350 million liters a year. Retail is 4 billion. So retail is really where the action is.
So who is Mr. William Teria?
I'm Ghanaian, first of all. I'm a Fanti. I grew up in Salt Pond. That's where I went to primary school. My father moved, or our family moved to Accra in the late 70s. I went to school in Prince of Peace Academy in Medina, and then Pre-Sec for 7 years.
So Prince of Peace near UPSA, that corner?
Yes, that's right.
I see. Amazing. But you are a management accountant by profession.
So I moved to the UK after my A-levels in Pre-Sec. I qualified as an accountant, at some point, and I worked.
Decision. So for me, even though the 11-12 is high, it is stable and predictable. So you are going for a facility, a dollar-denominated facility. You know that if it's 3 years, 2 years, if I borrow, let's say, $1 million and interest rate is, let's say, 2, because the rate on dollar-denominated facilities are low, you know that within this period, I'll be paying such and such amount, and you plan towards it. Where we have those periods where we cannot predict, today is 11, tomorrow is 17 and 20. You buy something or you go for a loan, if you are going to pay, it means you need more cedis to be able to pay for that dollar. And production was down, people were not buying. So it puts a lot of pressure on business. So the exchange rate is, for me, is important. It's very, very important, combined with all the other factors that you've spoken about. Maybe we'll get there with the interest rates. We may have a bit of issues now, because to see inflation at 3.2%, and policy rate at 14%. For me, it's still like a big gap. There is a misalignment somewhere, very gap. It means the real rate is very high. And when real rate is very high at that level, it does not enhance borrowing because you are scared.
So the policy rate must be closer to the inflation rate.
In fact, inflation is a major driver of all the indicators that we are talking about. They are all related. So if you see inflation coming down, then other important
so the 14
variables
should be lower.
It should be
the
lower.
17 should be lower.
I believe that we can do less than 10. The governor said it, that is his target, that we do less than 10%. For us to do 14%, for me, there is a misalignment there. Another bit also has to do with the Ghana reference rate.
You are doing too much, Apo. So basically, you are saying the rates have moved well, but they can be better.
They can be
You appreciate the coordination between monetary and fiscal, and you endorse the position that the macroeconomy is the basis for everything.
The basis for
Let's leave it here for now. Thank you, Mark Bedu Abuaje. I'll come back to you. I have 2 more people for this round. Let me come to Guta, Mr. Paddy. Which of the numbers are important for you? By the way, who is Guta? First and foremost, which of the numbers were important to you?
Guta is the eyes of the business community in Ghana.
The eyes of the business community in Ghana?
We are their eyes.
Okay.
When our eyes are closed, they can see.
So these guys are the legs or what? The ears?
Yes. You know, I think my brothers have said it all. And we Guta, some of the things we look for when we go into business, we look at the stability of the city.
Stability of the city. So exchange rate.
Exchange rate comes in there. We look at the interest rate. We look at the policy rate. And we also look at security. Secure the environment in business.
Security.
Yeah, security. These are some of the few things we're looking forward for. But in recent terms, looking at the exchange rate, once upon a time when the exchange rate was moving around 17 cedis to $1, and then now it's around 10%. So you see the savings that you have made. You can plow that 5 difference into your capital again. So when exchange rate drops, it helps business community to do business. Because cost of doing business is extremely high in this country. And that has been the cry of the business community. But in recent time, we've seen it drop, which is good for businesses. And then just last Friday, we met a bank, one of the commercial banks, and they say it's trying and it's ready going to do, it's going to do about 6% interest rate for the business community, which is a welcome news, especially for women in trading, women in business. So when all these indicators comes down, it helps business to strive and business to grow. So these are some of the few things we
So for you, the exchange rate is number 1?
It's a key point.
Because the things you import, you need dollars.
Exactly so. Because of that, it helps you to also do predictability. You can predict. And it can also help you to do projection. Because, you know, when you travel, in those days we were chasing dollars. You sell today, tomorrow morning you want $2. But I don't remember the last time I went to the bank for dollars. I'm waiting for the day out. I'm even praying that dollar will come down to a single digit. Oh, yes. That's my prayer.
So for you, there are 2 issues. The reduction from 17 or whatever number to the 11 is 1. Yes. And the fact that it stayed around that level.
And the stability. You know, we were not so sure. So we're asking, can we sustain the gains we are having? So that notion that, is it sustainability? Is it sustained? So the fear was that fear factor was there. But for the past 15 months, we've seen some stability in there. So that's why you don't see pressure on the dollar, the foreign exchange, as we used to experience once upon a time. So it's a good news for the business community.
Wonderful.
Yes. And then in recent time, we've seen also stable, secured environment. and that we can strive in business. Because if you are in business and you don't have a secured environment.
What do you mean secure environment? Are you talking like physical security?
One, physical security, where like our mothers travel all over the country, and it's not secure. You hear these robbery cases up and down, here and there. They are traveling to the north. They've been met by armed robbers. Their monies are taken away from them. But we've seen some stability in security. The security-wise, we've not had this challenge for the past few months that we've.
So that was not on my slide, which means beyond
yes.
the slide, there are things you look at.
Yeah,
so
exactly.
economics is not just about numbers. It's also
Yes.
about if you can drive to some place to buy.
Can I
food
travel
without
to
being shot.
Kumasi around 1 a.m. to go and trade, to go and do business? There are some of the things we consider as a business community. It's very critical to businesses, though it's not in your stride, but it's very one of the critical aspects of our businesses. Can we trade in secured environment? Can you trade while? Can you travel from one end of the country to the other end of the country and come back home safely? So these are some of the things we...
Maybe the economists must think of a business security index. Put into the data. But let's put that for Mr. Paddy. Thank you very much indeed. So now let me come to the market queen to also tell us the numbers we put up there. As a by the way, who is a market queen? What do you do? And which of these is important to you and your people?
Thank you very much. I'm a market queen because I'm a leader of a market.
Okay.
Apart from being the leader of a market, which is Mokola market. So first I'm Mokola market queen. Before I became the Greater Accra Market Association president.
Okay.
Consisting of about 67 markets in Greater Accra.
67 markets?
Markets in Greater Accra. We are in the group where we do our meetings and everything in this group, discuss what is going on in government, also put our input because we control the economy.
You control the economy.
You see, usually people see those in the market as illiterates who don't know what they are about. But presently, we know our left from right. And we know what is happening now with the city. The city is now stable. So we are happy. Because formerly, if you come to the market, you have to leave your goods, go running, searching for goods. Because if you have a box of milk at 20 cedis, and you don't buy 30 or 40, by the time you go back about 30 minutes time, it will be 40 cedis. So you are not sure of how to sell the goods, whether to sell it or whether to keep it and wait. Now, we are sure that if you go to the market, you get the goods. You come and sell and the price is stable. So we market women, we give credit where credit is due.
Okay.
So our main thanks is the government and the finance minister who is being able to control the governor of Bank of Ghana. And they are showing real interest in the market people. For the first time in our business, we have the Bank of Ghana governor coming to Mokola to ascertain what is happening there. We have the Minister for Finance coming to Mokola to see exactly what is happening there. Then, formally, if there's rise in goods, they will tell you the market women have increased goods. Please, we don't import goods. We trade in goods. So, if the city is stabilized now, and those who import the goods get good deal, naturally when they go and they bring the goods should come down. That is what we feel. That if the city is high and your goods are high, we do understand. Now the city is low. So why should your goods be high? But fortunately, I've got a little tip that the city being stabilized do not determine the prices of goods because there are other issues. But if that is the case, Why is it that when they stabilized the city, pure water, they were selling at their same price, 50 pesos. No problem. We were buying it. But when the city got a little bit up recently, they were fighting for increase. So what happened between the stability of the city and the time they just added something later? You see, we don't understand. And also, we want to tell Ghanaian public, please, Governor of Bank of Ghana, the coins are still in existence because it's the coins that they are removing out of the system that is adding up to some things. Because if they say ice water is 30 pesos, where will you get the change? If they say it's 50, how? So presently, from 50 pesos, if you don't take care, they will add another fee, which is 100% increase. So if the coins is in existence, the person knows that if it is 40 pesos and I sell it 40, I will get coins 60 pesos to give as change. So let's get to the members that the coins are still in existence. Also, we want to raise an issue. Please, we are pleading with authorities. The economy, I told you, is for the market women because little drops of water make a mighty ocean. You will be in the store from morning to evening. You may not sell anything. But if I'm selling ice water, mango, by all means, somebody will drink ice water. If we are going to the banks, they come to us with T-shirt, 9 stories, speaking politely in our languages. If you get to the bank, you see them in their air condition with their big suit trying to speak big English. Whilst they didn't use the big English to come and collect our money from the market, we want them to see us at our level and treat us to that level. The next issue is...
Auntie Mercy, I have more time for you. But we'll take a break. Auntie Mercy, na Afoa Nijan. Thank you so much. Let's put a hand for her. So after the end of the first round, it's very clear that everybody appreciates the progress made. The AGI says inflation is critical, lending rate is important, GNCCI agrees. They also talk about exchange rate, which the GUTA agrees. And our market queen has also explained what is good about what has happened. When we come back, we'll spend about 10 minutes discussing the cost of this. Because people keep saying there's no money in the system and that the government is squeezing us to make the numbers look nice. Right? We'll deal with that. They also talk about the effect of this on the Bank of Ghana's balance sheet. Now they're saying they are running losses. Right? Has this cost been worth, or has this improvement been worth the cost? We'll deal with that briefly. And then in the next round, we'll look at what next, what must be done for this type of thing to be sustained, to reflect in the lives, not only of these people here, but also of our students who pay school fees, have to buy examination material, have to eat breakfast, and also sort out their beloveds by WhatsApp and all of that. This is the Channel 1 Quarterly Economic Review. We're live on Channel 1 Television and on social media. Stay with us, we'll be right back.
Turn up your sound experience with the We Hear speakers by Novi. From the sleek We Hear 1 to the powerful We Hear 2. And now the premium We Hear Pro. Fully endorsed by Kylian Mbappe. This is not just a speaker, it's a flexible, high-performance outdoor Bluetooth speaker built to bring your music to life anywhere. With up to 100 watts of music power, you get bold, immersive sound wherever you go. All available in stylish standout colors. Now the Good news! From April 20th to May 20th, grab yours at a special discounted price. The We Hear 1 now at 400 Ghana cedis, the We Hear 2 at 900 Ghana cedis, and the premium We Hear Pro now as 3,800 Ghana cedis. Don't miss out. Call 020-195-7739 or pick up at the Atlantic Towers. You can also grab yours at Orange FM Kumasi, Plus FM, or 3 Music TV in Accra. Number 12 Afunya Street at Belenpe. Don't miss out on this special discounted offer. It's the We Hear promo powered by Lovi. We Hear. Feel the power. Hear the difference.
In a nation full of questions, where truth often hides behind noise, one show dares to ask what truly matters face to face. With fearless clarity and a quest for accountability, host Umaru Sanda Amadou sits down with the movers and shakers of politics, governance, society, and business, confronting the issues that define our national conversation.
Yes, I am Umaru Sanda Amadou. This is Face to Face, and you're welcome. I say very often on the floor of Parliament that when we were in government, we got some things right, we got some things wrong. Are you still planning to go to Parliament, or you want to look at National Party office position?
No, I'll be going back to Parliament. There's an unfinished business which I need to do.
Sports has 3 legs: development, management, and promotion.
Disintegration is extreme. We do not wish that even on your worst enemy.
Every Tuesday at 9 p.m., join Umaru Sanda Amadou on Face to Face as he digs deeper, challenges power, and reveals the stories shaping Ghana's future. Only on Channel 1 TV.
And all their modern ambition pace, there is no margin for error. So much here is familiar.
Over 1,900 games brought us here.
There is not a sporting heat quite like this.
But history doesn't care about the journey.
The Premier League is the best league in the world. La Liga is far and beyond the biggest winner.
It only remembers how it ends.
You bottle it. There's no other word. You bottle it.
8 titles. 1 month of mayhem to decide them all.
Outstanding from Patrick Dorgan.
Stay connected and watch DSTV to catch the football season finale this May. It's on.
So this is still the Channel 1 Economic Quarterly coming to you from our studios here at Tesano. My name is Bernard Avle. I have a panel of 6 who are analyzing Ghana's economic journey. We have 3 frames of reference. Pre-COVID 2019, we have the peak of the crisis 2022, final quarter, and of course 2024, the election year. My guests include 2 economists, 2 traders, and then 2 business association heads. We've looked at the journey so far. There's a lot of complaint sometimes on radio from my listeners around the government is making the numbers look nice so they can go and tell IMF a good story. But in our pockets, it's difficult. Some point to, they say, ATU is not spending. I've heard that a lot in Parliament and on the ground. Look at this chart, for example. The expenditure line is the red line, and the revenue line is the green line. Okay, so the green line is flat. That's not a challenge. But people are saying, the government keeps reducing its expenditure. While that may be good for its fiscal numbers, it means whether it's investment in roads or hospitals or salary increases or in bridges, there will be a challenge there. Theo, so what do you say to those who say the cost of these numbers has been money in people's pockets and spending on other areas which are equally necessary?
Not fully the case, right? So I think you made an important point just before your last sentence, which is, where is the money actually going to? In other words, what is the quality of the expenditure, right? So you see these numbers, the 26% of GDP, and at one point it comes down to 24 and then 20. And you can actually take this chart all the way back 30 years, and you will see consistently over time, every year, we've had almost a 6 to 7% gap between your expenditure and your revenue. 2 things happen. you have to go borrow to meet the shortfall, or you have to increase what? Taxes, right? And the type of spending also is actually extremely important here. So what you actually see in the 2025 numbers, where expenditure is around 16%, right, of GDP, almost close to what you have with your spending, reflects two things. The first big thing really being the interest savings that we had as a result of the debt exchange program, and then all the renegotiated, right, debt with different creditor, right, profiles that has taken place. The other bit that people also talk about is the capex number, right? So again, if you actually look at the total expenditure relative to what we communicated in the budget, the expenditure performance or the outturn was like 87%. Government did not cut back on employee compensation. In fact, we even spent 4% more on employee compensation, and then spent another 6% more on grants to other government units, so your district assemblies, common fund, NHIS, all these that in the past would complain for 9 months in a year, sometimes their monies are not even released to them. For the first time in a very long time, I can tell you that we remain current on all of these, right, subvented agencies, and their monies are going to them. The bit that was a challenge has to do with the capital expenditure, right? The reason was last year, remember that we introduced the commitment authorization. And this is one of the big reforms that we put in place to try and control spending, but importantly, make sure that spending is tied to efficiency and outcomes. Right? There's a lot of leakage, there's a lot of waste in the system. So in the process of people having to adjust to this new regime, you did have a bit of a slowdown in terms of getting those commitment authorizations and all of that, and that's been resolved. And as we speak currently, that's all in process. And the 2026 budget numbers also show that we're actually ramping up on the capital spending front. So the important point I'm trying to make is that the devil is in the details. That we need to actually unpack, if you go back, where has the expenditure been? Not in terms of the share relative to GDP or even in nominal terms, but is it going into the right sectors of the economy, right? Are we investing in roads? Are we investing in infrastructure? And we're saying that for some of the projects that we need to do now, we're not going to necessarily do the big borrowings to actually do that. Some of those projects should be able to pay off by themselves. So like the Accra-Kumasi, right, expressway, which is being done, we've actually got a pot of money set aside from the petroleum and then from your mineral funds to be able to do that project. You can tow the road. I can drive from here to Kumasi within 3 hours, and my friend here market women can go at night and be comfortable and able to do that. You can see the same thing even on the revenue side as well, right? So you look at the revenue mix and where the revenues are coming from, and some of the reforms that, again, we've done to try and anchor and ensure that you're getting in the right, revenues that are coming in. So, for example, there's ongoing payroll reform. There's work being done around procurement. So, also with the VAT system. My friends here will tell you for a while they were paying 21.9%, almost 22. It's come down to 20. There's even room for it to possibly go down, subject to all the reforms that are being done and then seen, right? But the whole idea is that you want to make Ghana the best place to do business in West Africa. And from what the minister has said, and the government and the team working on this, we're quite clear that the gains that we have made is here to stay. Going forward, what you need to do is practically three things, right? How do you ensure that all of this translates into productivity? And number two, how do you ensure that this actually creates more jobs? And then number three, how do you actually ensure that this helps to reduce poverty and inequality? Because at the end of the day, these numbers are a means to an end. The end is to ensure that ordinary Ghanaian citizens the market women can be able to go about and do their business, and feel safe that they are in a space and in a country that appreciates them. Let me finish off with the same story. My friend that I was talking to, the barber, right? He said if he has the chance, he will travel outside of the country, right, to seek economic opportunities. However, if he also has the opportunity to be able to go and expand his business, then possibly he will end up staying here. And we did some numbers from the barbering shop that imagine he's able to maybe open 2 or 3 more. Probably he will be able to employ 10 more people. And then the multiplier actually is such that for every 1 cedi that you're paying somebody in terms of employment, it would cascade down to a multiplier of about 5 or 4 to 5, right? So really what we're doing here, and a lot of the reform effort, is to ensure that ultimately you can grow the economy, but importantly, you translate that into productivity, into jobs, and then to reduce the
There's a big question they will ask you when they will start feeling it in their pockets.
Oh, but we've just discussed the inflation thing here in the first round, right? And I am sure some of them may re-echo the sentiment here. So it wasn't just me. The business people have also said, that yes, prices have come down relative to where they were
So you dealt with the fiscal side. Let's come to Dr. Afo. I interviewed the governor of the Bank of Ghana 3 weeks ago, and he was quick to point out that we will begin to see the effects of the stabilization on the balance sheet of the bank. He sort of admitted that the BOG's financials will suffer. There will be losses. Before that, we heard there was a whole discussion about the gold board losses, because don't forget the central bank has been accumulating gold reserves. And there seems to be some loss that the IMF is not sure whether the gold board should be the one to bear it or the BOG should be the one to bear it. What is your comment about the effects of this type of stabilization on the central bank's financials? Because they have been hit by the type of benefits we've seen. Is it justified for a central bank to be making such losses in the face of what we've discussed so far?
Okay, so let me let me give you this perspective. We all spoke, when you started, you gave us a certain transmission mechanism, right? Currently, the monetary policy that the Bank of Ghana is implementing is the inflation targeting framework. And the framework thrives more on the ability to manage the expectations of the public, right? And so that is why they set a certain target, the target band, which is 8 plus or minus 2%. And they try to implement policies that will drive the inflation towards that target. Okay. So ideally, the main tool that they use is the policy rate, the monetary policy rate. So theoretically, you expect that when they adjust the policy rates, it should feed in through to the rates of the commercial banks, and then we should have a certain impact on the real sector of the economy. But what we have seen, historically, shows that there's that rigidity in terms of the lending rate responding to the policy rate.
Okay.
And indeed, if you look at the issues why the lending rate has been rigid, there are many structural issues, right? So, 2 things. If you want the monetary policy mechanism to work, then it's not just about regulating or adjusting the policy rate. You need to also deal with the structural issues.
Okay.
One of them is, imagine that your banking sector, they hold excess reserves. And the banks are profit-maximizing institutions. So they are not just looking at the policy rate, but they're also looking around to see where they can maximize profits. So that is one of the reasons why you said that in the beginning, during your introduction, you see that the banks will take advantage of the government instruments. And when that happens, it means that it breaks the transmission mechanism because it feeds into the reference rate, and then the reference rate in a way will have some independent effects on the real sector, which will break the transmission mechanism of the monetary policy to the real sector. And so the losses that we are talking about, first of all, let me use 2 statements that they are accounting losses, right? And The other one is the fact that they are necessary correction losses. So in this case, what the central bank did was to find a way to mop up the excess liquidity in the system. That's, that structural issue that I spoke about. And one of the things that they did was to use the OMO, the open market operation, right? And so they invite the commercial banks, they introduce a certain instrument today, they invite them and they are going to pay them a certain interest. It comes at a cost, right? And the cost is that you are going to pay them a certain interest, okay? So that is one of the mechanisms that the central bank used, and for which, if you see the financial statement, you will see it as a cost. But I must say that it is not like a misallocation. It was to correct the problem that we had in the system in terms of, well, we spoke about the seeding depreciating at a very high rate, right? And think about it this way. If the central bank did not do it, we've spoken in the first round about the effects of inflation. It means that for you and I, we will have to bear the cost of inflation. If you look at the data that you showed, in 2023, we started the year with 54% or 53.6% of inflation, okay? Though inflation decreased, generally if you look at 2023, the inflation rate, the average inflation rate was about 40%. If you look at 2024, we recorded disinflation periods, but the inflation rate generally was about 20% plus. And that is a cost to us, which we've indirectly, before the first round, we express how now we live that we are. So it means that we will be bearing the cost. So your savings will have no return. In real terms, you will actually be losing if we should have dealt with the inflation rate, a sustained inflation rate of about 20%, right? Your real wages will also be affected. And again, the impact of inflation is not like, it's not uniform. Different people in the economy, depending on where you are on the income distribution, will feel the impact of inflation differently. And we are talking about quality of life. So you don't want those at the lower tail of the distribution to bear disproportionate, implication of the inflation rate. So this is a cost that the central bank absorbed. So it absorbed the fact that there was that structural problem. And so once you remove or you minimize the structural problem, then you can have the policy rate, work, or the transmission mechanism work. And so that is why now you see a policy rate and a lending rate. Well, we talked about the fact that there's some gap, but at least if you compare to what we had in the past, the gap has narrowed. And again, I must add the fact that, when you talk about this macroeconomic indicators, there's always that response lag. So you don't expect that the moment the policy maker does this, you expect that the rest will follow immediately. It takes time. So we expect that if this is sustained, then it should take time for the gap between the policy rate and then the lending rate to also to minimize. Okay. So I would say that if you compare the economic cost associated with the accounting losses that we are talking about, which you see on the books of the bank, it's worth it, because imagine that you and I were supposed to bear that cost. And the fact that I spoke about the fact that the cost on the ordinary person will depends on where you are. And so it means it has implication on the distribution of income, and then you don't want to worsen inequality in the economy. And so to a large extent, it was proportionate. If you look at the economic cost associated with the action that the Bank of Ghana took, and then the gains that we are saying. Yes, if you take the issue of the gold. Now, if you look at the domestic gold purchase program, what the bank did through the gold board was to buy directly from, our miners, right? And indeed, we don't set the international price for gold, right? And so what they do is they pay the market rate to the miners, right? But then in the books of the central bank, they record it using the official rate. So you see a gap, and that will be reflected in the book as a loss.
So that was the $214 million trade loss.
Exactly.
That the Gold for Reserve program incurred, which the IMF pointed out in addition to open market operation costs rising from 8 billion to 16 billion. So those are two big costs. You are saying that these are accounting losses and also, you say, necessary correctional losses. So if the correction has been done, we shouldn't expect a loss next year. So for 2026, end of year, if there's a loss, we have an issue. Because you're saying the 2025 loss was to correct a problem. If that problem has been corrected, like we are all saying, the next end of 2026, we shouldn't have the same type of loss.
Yes, we shouldn't have the same type of loss. It doesn't mean that we may not have a certain loss because, listen, in 2025, if you look at the action by the central bank, I mean, we're looking at a situation where there was a huge debt overhang, right? That had been accumulated over the years when we were doing the deficit financing. And so once you start the process, definitely to clear that huge liquidity in the system, it will be costly. Yes, going into 2026 and beyond, even if the central bank implements OMO, open market operation, because they are going to pay a certain interest, you expect that the cost should be minimized significantly because now that accumulated, liquidity has been cleared.
All right. Thank you. 30 seconds on this because I want to come back to so what, right? We've talked a lot of economics things. The so what is important about your last point on this issue.
No. I mean, the point you're making actually ties into your point about the so what, which is really the cost benefit, right? Milton Friedman made a famous statement: inflation is a theft or the biggest, stealer of people's resources, right? The central bank's mandate is primarily two things: inflation and growth. And then they use a range of instruments to help, right, do that. Remember that the central bank 2 years ago had recorded a certain negative equity. And they had even applied to be recapitalized. By the fiscal authorities, right? So you're coming in from a position of a loss 2 years before, plus some adjustments that you've had to do now to really anchor inflation expectations, right? So your lower inflation that you are seeing, the exchange rate stability, the confidence, all the nice things that we're talking about here, which are the real tangible economic benefits, right, would have an accounting cost. And that's what she's basically trying to sort of explain, right, to us. The counterfactual in policy terms would have been, you would have still, if you did not have gold board, you would still have to go to the market to borrow, right? You would do Eurobonds 7-8%, and even now, because we have defaulted on our debt, probably 10%, right? But now you're able to actually do that, all of that, at around 2 to 3, right, percent. So the net effect of that, plus the fact that the central bank had taken a hit from the debt exchange, right, 2 years ago, plus the fact that they have had to do all these open market operations to bring down, right, or mop up excess liquidity in the system, plus even the fact that the CD appreciation itself has an effect on the central bank's reserves, right? Because when the exchange rate, right, improves, when you do the reserves conversion in CD terms, it comes down, right? So you have all these four factors that needs to be comprehensively analyzed to come to the position. The question then is, going forward, do we expect this to reduce? Yes, absolutely. So it's not to suddenly move from a big negative loss to a positive overnight. It wouldn't happen.
It will take time.
It's going to take a process of time. But what you want to see clearly as part of the signaling is that quantum of the losses, right, coming down over time. And then citizens also seeing the benefit. The worst thing is actually having loss and the citizens not seeing the benefit.
Wonderful.
Right? But to the extent that citizens can feel it in the exchange rates and in the stable macro fundamentals, that is a policy cost and a trade-off that we have to, reflect.
Please put your hands together for the economists. This is still the Channel 1 Economic Quarterly. When we come back, we now ask our 4 remaining panelists, so what next? Key point. What 1 or 2 areas must government pay attention to sustain this and also to translate it into measurable improvement in the things they do, whether they are manufacturers or traders? This is the critical question. We also have our audience here who have a couple of questions to ask as well. This is our live edition of the Channel 1 Quarterly Economic Outlook. Stay with us.
Another year is here, a new beginning, a fresh opportunity to draw closer to God and to one another. This family month, your family radio station, 97.3 CDFM, invites you and your loved ones to something truly special. The 2026 Family Consecration Service, a sacred gathering where families come together in prayer, faith, and unity. It's a moment to dedicate your home to God's loving care, to seek His protection, His guidance, and His peace over every household. Come and experience divine connection as we pray for strength, restoration, unity, and direction for our families. Married couples will also have the opportunity to renew their vows, reaffirming love, commitment, and purpose. The date is Friday, the 1st of May, 2026, from 6 a.m. to 12 noon. The venue is the Oil Dome, Royal House Chapel, Accra. Bring your entire family and come expectant. And let's commit our homes into God's hands. 2026 Family Consecration Service is powered by 97.3 CDFM with support from Channel 1 TV, because the family that prays together stays together.
Calls me in the power for Christ the solid.
In a nation full of questions, where truth often hides behind noise, one show dares to ask what truly matters face to face. With fearless clarity and a quest for accountability, host Marusanda Amadou sits down with the movers and shakers of politics, governance, society, and business, confronting the issues that define our national conversation.
Yes, I am Marusanda Amadou. This is Face to Face, and you're welcome. I say very often on the floor of Parliament that when we were in government, we got some things right, we got some things wrong. Are you still planning to go to Parliament, or you want to look at National Party office position?
No, I'll be going back to Parliament. There's an unfinished business which I need to do.
Sports has three legs: development, management, and promotion.
Disintegration is extreme. We do not wish that even on your worst enemy.
Every Tuesday at 9 p.m., join Marusanda Amadou on Face to Face as he digs deeper, challenges power, and reveals the stories shaping Ghana's future. Only on Channel 1 TV.
The call of forgiveness. May God grant you the grace.
This April, 97.3 CDFM invites you into a deeper place of faith, reflection, and divine connection with Seasons of Prayer, a special edition focused on the family. Step into a sacred month of renewal designed to strengthen homes, restore relationships, and draw families closer to God. In the midst of life's pressures and responsibilities, this is your moment to pause, seek, and reconnect together with the source of peace, unity, and direction. Whether you're trusting God for healing in your home, wisdom for parenting, unity in relationships, or a stronger spiritual foundation for your family, this is more than a program. It's a divine appointment. A time to reflect, refuel, and realign your family with God's purpose. Join us from April 1st to April 30th, 2026, only on 97.3 CDFM. Tune in to Midnight Cry from 12 a.m. to 1 a.m. This is your day from 4 a.m. to 6 a.m. Prayer Encounter from 12 noon to 1 p.m. For more information, call 0244-981112. Let this be the season where your family prays together, stands together, and experiences God's hand together. Seasons of Prayer is powered by 97.3 City FM.
Welcome back. We're still here on the Channel 1 Economic Quarterly, coming to you live from our studios in Tesano. You may send us your comments on the number we've put on the screen. We have 2 economists, we have 2 traders, and then 2 industry people. Makbedu Abaji, GNCCI, Setu Makwabwa of AGI, Auntie Messi, who is our market queen, and of course, Mr. Paddy from the Guta. We also have Dr. Afo Mensah and Dr. Theo Champong. Let me come to Setu Makwabwa. You said you are happy with lower interest rates, but you want more lending to come to manufacturing. What else do you want to see to translate this?
You need to take the speculation out so that the real players will play in the market. It got to a point where people were, changing cedis into dollars so that they can hold it and then become more relevant to them as and when needed. But you need to take that out. Once you take that out, the speculators move out of the market. You can always have reasonable stability. So we needed that badly. So there must have been a cost. There's no doubt about it. And it's also judged from the fact that even if you look at the graph you showed, revenue and expenditure were almost at par at some point. There was such a big gap in the earlier years. Now we are seeing them almost at par. It means that there's some prudence in the management of the resources. And I think that is also very important. But the cost of it is that some serialization is going on. Government is not spending as much. When government is not spending as much, it also has implications. Disposable income becomes a challenge. People will say, oh, there's no money in the system. That also has implications on, purchase of goods and services and all that. So all that cost is there. We have to accommodate it. However, can it be accommodated for long? Not too long. How we quickly respond to these reforms that are taking place is very, very important. And as Doc mentioned, the structural changes in the economy is equally important. Otherwise, this cost that so-called cost, quote and unquote, that we say we are incurring will not have a positive impact. For now, for me, it is very important that we've gone through that process. We've reached a stage where we think that we are now catapulting to something else, which is more developmental. But we need to quickly move in and make sure that the real sector respond quickly. So, for example, cost of electricity and the availability of it. Shouldn't it be cheaper? Why is industry subsidizing residential users of electricity? It is too expensive for us. So in that case, even if you have stabilized the system, the ability to respond becomes a challenge because the other factors are not working that well. Again, if you look at the value chains, are they working that well? So in the agricultural sector, I think that the Ministry of Agri has introduced quite a number of measures. The government has introduced 24-hour economy. We have transitioned from 1D, 1F to 24-hour economy. The linkage for me is very important because there were people who benefited from 1D, 1F, invested. How do we ensure that they are migrated to 24-hour economy? If it is exemptions they were given, how do we make sure that they get exemptions? Because people are complaining that I got the exemption at the 1D, 1F, and the 24-hour economy is not clear. How do I get my exemption? And GRA is going back to ask them to pay and all that. So we need to look at the real sector and push to make sure that the manufacturing sector and the industry sector actually moves to make the whatever costs or losses they've made translate into reproductive arrangement. The banking sector is also key. I talked about the lending. But the lending, let's look at it from different angles. We have commercial lending and we have developmental lending. I think what we are lacking in the system is the kind of funding that will give loans to businesses medium to long term. For industry, they need medium to long term funding. Exim Bank is there, Development Bank has been introduced, the NIBs are there. We have to examine their operations to see what percentage of their monies or portfolio is going to the real industrial sector. Exim Bank, for example, they're always offering much lower interest rates. Now that the interest rate has dropped, what rate are they offering now? We need to know, is it in tandem with the fall in the general interest rate? If it is, then that's fine. But if at the point they were lending at 12% and the commercial rate was at 30%, now that is falling to 17 to 15 or 16%.
The 12 must come down to like 3.
It must come down to like 6. So we need to examine it. I don't know yet, but we need to examine it. So those are the factors we need to look at. Then also, there is also, going forward, we need to also tread cautiously with the IMF exiting in the next couple of months or so. What will be the implication? We've gained so much confidence in the system. We've really gingered people to invest now, government has done very well in managing the economy in a very prudent manner. That has brought confidence. If IMF exists, what is the implication?
Wonderful.
So we want to see that also manifesting. And then how do we also make imports, the imports, local production arrangements?
I know where you're going.
Issue. You know where I'm going. And
Import versus local production.
Yes. I think that as a country, if we want to make gains out of these reforms and that cost which we are absorbing, it means that we must find a way to improve local production and reduce our imports.
Very good.
So that we don't really always be at the mercy of the international market.
Wonderful.
The slightest shock, you feel it. Let's increase local production. There are so many ways of doing that.
Thank you very much, Mark. Sorry, Seth. Let's bring in Mark, GNCCI. Anything else in terms of what must be done for this to translate for you and your members?
So, if you look at the inflation figures, the recently released one, you realize that the cost for locally manufactured products is still high. It's above the average inflation of 3.2. It's moved from 4.5 to 4.9. That should tell you that the cost of local production is very high. Check that of imported products. It's from 0.6 to negative. The first time probably we have recorded a deflation in a particular, and that is the direct effect of the appreciation of the.
So these people, there are things are cheaper than these people.
Obviously. So he made mention of the fact that we need to produce more to export more, and it's important that we check the cost of locally manufactured products. The electricity he made mention of is key. Let me add figures to it just to put it in that right perspective. Recently, I spoke to one of our members. I thought the cost per kilowatt hour, I always use 12 cents per kilowatt hour. I spoke to him and he said they are doing 18 cents per kilowatt hour.
Wow.
Most of the good manufacturing companies we have in the world, they are doing less than 5 cents per kilowatt hour. How do you compete? So businesses in Ghana, even though we've seen this stability, for me, it's a necessary condition.
Manufacturing companies need lower
they
cost of
need
power
lower cost
to be
of
competitive.
Power to be competitive.
Wonderful.
They are not competitive now. The export, the trade surplus. We say we've made a surplus of, I think, 40 billion or so. Go to the numbers, disaggregate, and see. They were all in nominal terms. It's because gold prices went up, so we were able to make that. The actual real terms, we made a deficit of about 1.so billion, which means that the actual production, the volumes of export, was
so
not.
A lot of our trade surplus came from the appreciation of gold.
Yes,
but that was both in volume and value, because there was also gold volume increase and gold price increase.
So in a country, if you really want to transform, I think we should move from export of just narrow three products.
Gold, cocoa, oil.
Gold, cocoa,
that's
oil.
90%.
90%.
Too high.
It's too high.
We need NTs.
We need to diversify our export. That is where the manufacturing come in.
Correct.
So anytime we are very vulnerable. Anytime you see these prices reversing, we'll be in trouble. But if we have manufacturing, we are exporting. In fact, in Africa here, we demand for less than the things we produce. Because, for instance, if you have cassava, if you have nobody in Africa needs cassava, but you have added value to it and it's a starch, it becomes a base for manufacturing companies. So we can export for pharmaceutical. We can export to almost every part of the world to be needed. So we need to increase the production.
Wonderful.
Now, Bernard, we need to transition from these numbers to developmental indicators. And I'm sure that our colleagues here will be looking at how this thing will translate into employment. I have been very much concerned about the rate of unemployment. And I think that we should tackle this from all angles. Government alone cannot do it because government just employ about 6%. It is only when we stimulate the private sector that they can expand and employ our people.
Wonderful.
In fact, 1.4 million people, youth, are looking for a job. They are not getting. Every year, we churn out more than 200,000 graduates. So they are here, they are thinking that after school, they will get a job. Your seniors who finished years ago, they are still there looking for a job. Only 10% in a year get a job. So now be thinking about how you can create your own jobs. Don't wait because the government cannot employ you. The businesses are not expanding. I'm not scaring you, but I'm telling you the facts. Yes. So what we are doing as a chamber, from our own point of view, is to train these students to become job creators and not job seekers.
Wonderful.
So we are setting up what we call junior chambers in all the universities.
Wow.
We've done UMAT, we've done Tech, we've done University of Ghana.
You need to do Unimac GIG.
We do Unimac. and Bernard, the idea is that if you talk to the students, they have solutions to almost all our problems that we are facing. But who will mentor them? Who will hold their hand? The transition from being a student to entrepreneur and coming to the real world to do business. Serious. Somebody define entrepreneurship as somebody, if your business collapse, you collapse. Because everything depends on that particular business.
Wonderful.
So they need that practical skill. That is what the chamber is providing.
Right.
They need that mentorship. That is what the chamber is providing. They need that networking. That's what the chamber is providing for our students. So we have said that we'll go to other universities. Thankfully, the Bank of Ghana is coming on board. That beyond the practical tools we are giving to them, they also come and support to provide something small for you to start a business.
Sharp.
I was a keynote speaker, Gimpa, last week. They were doing, they were pitching their, their business plans. But the idea is brilliant. Somebody just needs 10,000 Ghana cedis.
Oh.
And it's transforming waste, the dresses we have that we are throwing away, into new dresses that he's selling. 10,000.
Just 10,000.
10,000 is not getting. Can you imagine if you identify 50 of such individuals in all our universities? And we say we are just giving you 30,000.
Wow.
Do you know the number of businesses we create? If each of them decide to employ just 5 people, just assume 5 people, Bernard, will be able to solve this unemployment
Wonderful.
issue. But beyond the unemployment, a quick one, it's also the issue of underemployment.
We will deal with that.
We will deal with that.
Thank you very much, Mark.
So we want to say a big thank you to the governor as well and the other.
Let me come to, thank you so much. That was GNCCI. Guta.
Yeah. I can assure the students here that we have a space for them in Guta when they should come.
Okay.
Because to be sincere with you, after school, I've never worked for anybody.
Wow.
Throughout my life.
Wow.
I've worked for myself. And I started my business with just $100.
$100?
Just $100. Whilst I was in school, I was saving. Yes.
That's like 1,000 cedis.
Yes. And that's how I started my business.
But what year was that?
In the 80s.
It was millions of cedis.
But it's still possible.
In the 80s was a lot of money.
Yeah, it's still possible. You see, so try to create job. You know, like Mark was saying, I went to one of the universities, and I told them there's too much business in the country for you. We don't know. I said, look at just Abosokai. There are thousands of shops there, and then I just picked one boy, and I said, look, for the past 8 years, I've not got to renew my license at a register general. So I gave it to the guy. He went and did the renewal for the 8 years for me. And he identified just 10 people, and he started doing their renewals for them. And he made so much money. Recently, I was there, and the guy came, brought something to my office. He said, boss, this is what I'm going to come to thank you with.
Wow.
He's now self-employed. He's employed himself, and he's working for himself. And he's going around renewing people's documents for them. So there's too much work at there. And I also told some of the university students, you are accounting student. People are finding it difficult to do their returns on VAT. Just identify about 10 shops and start working for them. So don't wait for government to employ yourself.
Some of them may need communication plans, marketing strategy, PR strategy. So
recently, our organization was looking for a blogger.
A blogger?
Just to come and do a blogger on our platform for us. We were looking for someone to host our site for us. So everything is, so don't look forward. Yes. So don't always look at government to employ you. The private sector is the engine of growth. When you're a private sector person, you can do everything. Yes, you can have more than even one job. So it's very important. Think about that.
Wonderful.
Yeah, very necessary. But so far, the business environment we find ourselves now is very prudent and it's very good. It's a healthy environment. We think government has done well. We think the Bank of Ghana has also done well by giving us a little cheaper credit. Now, once upon a time, we were crowded out of the market money, where government was chasing the same money the business community were chasing. But now the banks are now chasing us for facilities, which we think is a healthy environment for the business community. Now you can do projection because of the stability of the cedi against the dollar. Once upon a time, you sell today, tomorrow morning you want to go and chase dollar. But like I said the first time, I don't remember the last I went to the bank looking for dollar. Because I'm thinking that further drop down by the works of this current governor that is doing. So the environment is healthy for business now. So we're taking advantage of that. That is why the rate of inflation we see now is not like where almost every morning, like Madam said, today you come and buy the thing 12 cedis. Tomorrow morning, you go and buy it 14 cedis. So you can't do projection. But with this stability, you're able to do projection.
Okay.
That, and even with our goods of importation, we are also able to do projection. That in the next quarter, when I go to even the port to clear my goods, there's a certain rate that I can use. So I don't need to worry myself. And as a businessman, if you can't do projection in your business, you fail. Yes. So there must be incentives. Now we can predict what happens in the next 3 months, in the next 4 months. So I think whatever they did to have this success, what are they doing to sustain it? Sustainability is also critical. So what is government doing to sustain these gains and also have further gains? That's what the business community we are looking forward for.
Wonderful.
And we'll support in every area, in the area of revenue. And I believe that if government is able to sustain it, we'll have the needed revenue to build a country.
Let's put our hands together for Mr. Joseph Paddy. The last one for this one is now Messi, anti-Messi. So anything else that you think the government should do beyond what you've said to sustain the gains and to make it easier for the traders to expand the economy?
Thank you very much. I think we need a lot from government, especially on our financial issue. It's rather unfortunate we are not able to do good bookkeeping. We are not able to do good accounting for the former banks to deal with us. Because if you go, they will tell you, bring your collateral, bring your papers, which most of us don't have. So we are pleading with the government, we are pleading with the director or Bank of Ghana, finance minister. They should make special avenue for them. They should create avenue. I know there's Women Development Bank, which will be coming on very, very soon. We are all hoping for the time. We are all waiting. It is a bank for women. And we appreciate it and just mold it to be a very good bank in Ghana. But those of us that deal with the former banks, please, they have their interest rates. When they are coming, or we are coming for the loan, they should give us proper education. Because I've gone through such, they say the interest rate is 2%. The woman thought the 2% is for the whole time. Very, very. But unfortunately, not knowing every month is 2%
per month.
So if you collect the loan for 1 year, it will be 2 to 1 year, which is 12%. 24%. You see, so the two you had went to 24%. So they should give a good education. If it's red, tell us it is red. 24, it is green. 2%. So I will take 3 months, or somebody will take 6 months for the interest rate to come down. Now, some people, or some of us are complaining that now they don't buy. It's not that they don't buy. The trick is formally, if you have money, instead of saving the money, you have to go ration after goods, because you have to go and get rice you eat for the month, drink you use for the month, because if you don't do that, the price will go up. Presently, the goods are there. Some have been reduced. If you take oil, rice, the everyday goods that we use, their prices have gone. We were buying the yellow gallon of oil 12 cedis. Now if you have 12,200. Now if you have 500, you will get the same gallon. So really the economy is good. We appreciate it. But they should know that because people are not buying the good in box to keep, naturally, trading will go slow. So that is what we are experiencing. Not that people are not buying. The next issue is, I will tell my sisters and brothers, please, about 2 weeks ago, I was on their platform, and I told them that be confident in yourself. Don't be shy. If you want to do business, come to the market. That is a big avenue. I was a teacher. My mother was in the market. I left the teaching service and I came to the market. And I have never regretted being in the market. Because the advantages I've got being in the market, I would not have got it if I were a teacher. I've been on boss because they needed this thing, the grassroots knowledge of business. And they will get it only from the market. And because I was a teacher, I got the advantage of my teacher market English to mix with those at the top. So don't feel shy. Come to the market. Usually, the market is open for everybody. And we are glad to receive, wherever market you go, see the market leader. That this is what, people are in the market, they don't have a password. They come to the market, you get free ice water container, you buy your ice water, you go round, then you come and take again. You don't pay anything. You only take your profit and bring the capital, unless you want to run away with the capital. You see? So, the business is in the market. But we are very vulnerable. So please, have mercy on us. We need money to do business. We cannot always sit in class 1. At least we have to move. But this time, I've been in the trading business for over 40 years. I have to reach university. I shouldn't be sitting at one place.
So you
trading,
need access to credit
yes,
for the informal sector,
yes,
priced in a way that will not suffocate your business. So the monthly interest rate must be looked at.
Yes.
I'm sure the authorities are listening. Let's put hands together for Auntie Mercy.
And let me put it this way. Truly speaking, if you loan money to women, they are substance.
They will pay.
And the payments is very sharp. No mistake.
I'm sure Dr. Afo has done some research on the gender and payment. I've heard people say that usually the gender of those who default, they tend to be more men than women. That women tend to pay better. I'm sure there's research on that as well. I'd like to take a few comments from the audience, and then I'll wrap up with GIPC CEO. There's an interesting comment here. Let me commend Channel 1 for this program. It was truly insightful and devoid of technical jargon. Kudos. My question is for Dr. Thuy Champong. Can the ministry really take a second look at the exchange rate dynamics between the CD and the CFA? Can there be a further downward adjustment? Dr. Champong, given that the rejection of the 20 peso coin by traders forces an upward rounding of prices for essential micro transactions, to what extent is this informal inflation undermining the ministry efforts to achieve price stability? And what enforcement or sensitization strategies are being planned to restore the functional utility of our small denominations? This is Ntifafa from Aflaw. It's a 2-in-1 question. We have a mic. We'll take any quick comments from the audience. Yes, madam, your name and your comment.
I'm Janet Anim.
Yes, please.
Please, based on this Cortes keys such as inflation and exchange rate, looking forward to the next quarter, please, I would like to ask that what are the top risks or biggest risk and top priorities to ensure sustained and inclusive growth in the economy?
Thank you. So what are the top risks and the top priorities for inclusive growth? Janet, thank you for your question. We'll take another one. Mention your name.
Thank you for the opportunity. My name is Hafiz Larry from the University of Media Arts and Communications. So my question would have to do with, of course, from a student point of view, we've seen the economy gaining stability, and as an entrepreneur, some of us make use of dollar for trading. So we've also seen some drop in prices compared to exchanging more cedis for the dollar. So we really appreciate the government for those gains. But my question would have to do with the gains that we've been able to achieve. How do we make sure that it doesn't reverse? and looking at the factors that has helped us achieve those gains, are they really things that would help us in the long run? That is my question. And thank you to Channel One.
Thank you, Hafiz, for your question. We'll come to the lady. Okay, yes, let's take the lady. Yes, madam.
To Dr. Tio Echampong. Yeah, for the policymakers on budget execution. Dr. Echampong, please, you have described the 2026 budget as credible and implementable. With the government targeting 1.5% primary surplus, what specific razor-sharp controls are being used to ensure we don't see the usual end-of-year expenditure slippages?
Thank you for your question. So we have the last question. So let's just wrap up. We have Janet's question on risks and priorities. We have Hafiz on sustaining the gains. And Sally wants to know how we can ensure that the primary surplus gets executed, that we don't overspend, because that's a very important question. Let me take another question. Yes, madam or sir. Yes, please rise and ask your question. Thank you, Sally.
Okay, so I am Grace Amankra, a student from Unimac as well. Yeah. So please, my question is, inflation has hit a record low of 3.2%, yet many consumers in Accra still complain that prices at the market haven't dropped. However, we can bridge the gap between How can we bridge the gap between macroeconomic data and the marketing reality to the public, so that it doesn't seem like the turnaround is just a political narrative? Thank you.
So you're talking about the gap between the macro, not the micro, the macro narrative and what's on the ground. So those are four big questions. I think we can, wow, we beg. Let's take some. Or are there any more? Somebody who hasn't asked? Okay, yes. Let me take this gentleman. Yes, sir. Grace.
Thank you very much.
Yes, please.
First of all, I would like to thank you and your team for organizing this program, for us to take a pause and review and assess our economy.
Wonderful.
However, as student leaders and future professionals, we are not just interested in an economic turnaround, but we are much concerned about a sustainable transformation that creates opportunity, empowers the youth, and improves everyday life. And how does these good numbers translate into better unemployment for we the youth? Because you don't want to have the situation whereby you finish school and say we have graduate association, unemployment graduate association in Ghana. We want to make sure we eradicate this from our system.
What's your name, please?
My name is Pascal Senyo Gamokasese from Unimac.
So that's Pascal's question. We have 5 big questions. I think we should. I think we can take some comments. Yes. So we have 5 questions. I think you can just make it brief, and then Dr. Gloria picks some of the questions as well.
Yeah, I think they've done very well, so we should give them a round of applause. The questions are razor sharp, and then very incisive, and I think it ties to a number of the points that is made. The question on the CD safer, I cannot give details here. I have to look at the data point. But the point that was made about the small coins, and then I think Mami also made that as well. I have actually noted that when I get back to the ministry, I'll take that up with the bosses and also with governor, and then we'll see what we can do to make that. Again, the history should guide us around here. So remember the 2007 redenomination, and part of the literature and the empirical data showing that it actually did sort of drive a bit of the inflation, right, expectations going forward, because you took 4 zeros and people were just rounding up, around that. The 3 questions that were asked, I'll tie them all in together about top risks, top priorities, and the sustainability of the gains, right, going forward. The gains, as far as I'm concerned and where we sit, we're doing any and everything to make sure that it is sustained. No two ways about that. We've learned a very painful lesson from the last 4 years. And those big fiscal slippages, those big waste that we saw in the system, is not the thing anymore. So a number of important things that are being done and actually being legislated on, really, is around how you maintain fiscal discipline. So, for example, in the PFM Act, we've made an amendment to the Act. There's a 1.5% primary surplus, and then your budget, your deficit not more than 45% of GDP by 2034. Last year we made the numbers. Nothing so far indicates that we're not going to meet the primary surplus, target. Number two, we are doing a lot in terms of cutting waste and rationalizing spending. You should be with me at the ministry when I'm sitting in the meetings and people come to my boss, the finance minister, to ask to spend, right? He would scrutinize, and at least you would leave with something taken off the budget, right? I'll give my example. Even within the ministry, I took a list to him of about 12 things. He took out 9 of them, only 3.
Only 3 left.
Yes. So the point I'm basically trying to make is that not because it's not important, but the fundamental question is, where are you getting the resource and what value does that actually bring to what you are doing, right? So you could do more with less. That's the point I'm trying to make. We're also doing a lot on the domestic revenue, right, mobilization, how you increase the tax handles, and that is not through more tax, actually rather through reforming of the handles and ensure that it does drive, productivity. In all of this, there is also work being done, and this is important here, on how you protect the vulnerable, right? Those social, those that are struggling. And again here, a lot of the investment in education, health, social protection, if you look at the budget numbers, they've increased, and we're actually putting money to where it's needed the most. The bit that we are even going to be doing more is on the capital expenditure, and we recognize that, at 1.5–2% CapEx to GDP is low relative to our peers. So we need to do more. How you do it is not to borrow necessarily to finance that. There are other innovative ways of how you leverage private capital, patient capital, to actually, drive all these reforms, right, going forward. And this is really the story that we are trying to tell, that even if we leave the IMF program in August, and that's been clearly communicated, the reforms that we have begun are here to stay. And it is also being backed up by law, right, with the Value for Money Office being set up, an independent fiscal council being set up. So you cannot just wake up to go and change the rules anyhow you want. It does require quite a lot of work that need to be done. My final point really on all of this, to tie back to some of the other points that have been made, is that the commitment going forward is in driving the real sector.
Okay.
Commercial agriculture, and then within the manufacturing, the issues that have been mentioned here, right? How you address energy cost, logistics cost, and financing cost, right? To help improve productivity. And financing is tied to a stronger banking sector. And you can trust the Bank of Ghana to be there to do its job of coordinating monetary policy to ultimately bring down interest rates, and then also drive, right, inflation, all of that down. And then the last point in all of this really is on the skills training, entrepreneurship, formalization issues, and business education. Again, there's a lot of work being done, around this. So I want to the youth and the young students that are here, that there are opportunities here. There are opportunities that you can tap into. And from the part of the government, for us as policymakers, all we're trying to do is to make sure that you can tap into those opportunities, train yourself, get the skills, get the capital, get the tools that you need to be able to create jobs right here in Ghana. That is what we want to do.
Wonderful. A round of applause. Before we end, we have a high-profile visitor, the CEO of the Ghana Investment Promotion Center. The president describes him as the country's chief marketing officer because he tries to attract both domestic and foreign capital to support our development. He told us he wanted to pass through to listen to what the private sector had to say, so it will also advise his policy. So, Mr. Simamaji, thank you for joining us. Just a few minutes on your own reflections on the economy so far and what lessons you are picking from here to advise how you execute your mandate at GIPC.
Well, thank you, Bernard, and we are grateful to Channel TV for this innovative idea. I think it's been excellent so far. We've all seen the work that's been done by government. You can't build on nothing. Government met an economy that was virtually comatose, so we had to spend a lot of time to revive the economy. Now, upon reviving the economy, government has two growth poles, which I want the youth to consider. One is the 24-hour economy, and the other is the big push. You cannot ignore what's going on around the country, the efforts being made to actually grow the economy, through those two important growth poles. We are waiting for the incentives. It's almost ready, and once that happens, we'll move into implementing it fully. So you should be prepared for that. Now, one other point that I picked up from this engagement is that the services sector is actually leading, which in some respects is not a bad thing. It means many of you have the opportunity to enter into the service sector. He spoke about opportunities rendered to traders and all that. So that's also a good area which you can look at. But we cannot go without mentioning the fact that now we have what we call the Virtual Asset Service Providers Law, cryptocurrency, Bitcoins. I know you are all into some form of crypto or the other, right? How many of you are into the crypto business? Please, it is legalized. You can be your own master. It's legalized. The BOG is going through the process. You see all the signposts. It's something you can take advantage of and be the leaders in a new economy that is emerging from our country. But on it, we can say all the 9 points Bernard you've raised, they are equally important, plus our political stability. We speak English, I keep saying it. We have a good legal system. We protect investors. The new GIPC bill actually has enhanced protection for investors. And so anybody investing, you can be sure that government will protect you. And it doesn't matter whether you're a foreign or a domestic investor. Now, the important part is the growth that we've seen and the stability in the economy means that any foreign investor coming into Ghana is coming to meet a strong Ghanaian business person to partner with. So you should be looking at becoming business owners of yourselves, and you can work together. One thing I've realized we don't do much in our countries, we don't work together. So from your schooling times, you need to work as partners and set up businesses that will outlive all of us. And you also could become the giant that we want to see in our country. So thank you very much, Bernard, and I'm very grateful to be here.
Wonderful. So that was Simon Maggi, who is the CEO of the Ghana Investment Promotion Center, basically charting the path forward. I'd like to say a big thank you to my panel. It's been a great morning. We've been hearing from 6 of the very best. Mark Bedua-Boaji, soon to be doctor, is the CEO of the Ghana National Chamber of Commerce and Industry. You notice a lot of these guys are economists as well. Economists and accountants working on his PhD. Mark, let's answer that for Mark Bedua-Boaji. And he had a lot of encouragement for the students about what they are doing. He's promised that he will send some of their GNCCI programs to UNIMAC, who are our audience. So it's called the Junior Chamber. You can join, and it helps in job creation and other entrepreneurial ideas. So they will hold you to your word. We've also had Setu Makwabwa, who is the CEO of the AGI. Let's put our hands together for Seth. Also an economist, an industry person representing the manufacturing sector, who have been very critical for Ghana's economic development. We'd like to thank also Dr. Gloria Afobensa for the very first time on Channel 1. Let's put our hands together for her. An economist and senior lecturer from the University of Ghana. Thank you for making complex things so simple. We really appreciate you. Dr. Theo Champon took all the bullets because he is a technical advisor for the Ministry of Finance, who are responsible for the fiscal leg of managing the economy, taxation, government spending, and confidence in the economy. And I think he's been a fantastic guest. Let's put our hands together for Doc. We've had, of course, everybody's star today has been Messina Afowa Nijan. Amazing. Amazing. I mean, from the practical issues about the coins to lending and how to make it simple, to the 2% per month not being properly explained, to what has to be done for the transmission effect, the fact that people are not buying. You've made it really interesting. I look forward to more interactions with you and your members. Let's put our hands together for Auntie Mercy one more time. And last but not least, my friend, Mr. Joseph Paddy of Guta, who make a lot of noise when the CD is not enough to buy dollars. But when things calm down, they just relax and chop the money quietly. So Joseph Paddy, a round of applause for Joseph Paddy as well. I'd like to thank our friends from UNIMAC. This is not the first time. Almost every major discussion we had. I remember when we did the Mahama 3.0, when we did the analysis of President Mohammed's first year, student from UNIMAC GIJ or UNIMAC IJ were here to support us some incisive questions. I know you had a lot of questions, but for want of time, we only took about 5. But let's put hands together for ourselves. And I finally like to commend our friends from Finex Skills Hub who use their data to produce such beautiful visuals, who've been partnering us on these very important discussions. So whilst we've made some progress, there's a lot of work to be done for us to build the economy together. Thank you for watching. There will be a replay of this program on The Point of View tonight at 9 p.m. My name is Bernard Avile. A big thank you to the production team. Till then, we'll see you next time. Have a great afternoon.